Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. An uneasy truce. The US and Iran pause strikes, sending oil and natural gas prices sharply lower. Meanwhile, China's chip champion CXMT soars as much as 530% in its debut in Shanghai. Elsewhere, investors get set for the biggest week of earnings from the global tech giants. And firefighters in France and Spain battle a sixth straight day of wildfires, with more than 300,000 people evacuated over the weekend. Well, a very good morning. Welcome to a new week. Here is the picture in markets as the tensions in the Middle East ease. So we have oil dropping, Brent at $92 a barrel, down 4.8%. It has been below $90 a barrel. Remember, it topped $100 a barrel last week, but it's pared some of those losses since this morning. Now, as inflation concerns ease, you've got bonds rallying. The 10-year Treasury yield here at 4.63, down 5 basis points. And the dollar starting the week on the back foot, although some analysts are warning there is a limit to how much relief can be priced at this stage because of the Middle East, given how far away a new memorandum of understanding remains, or even the prospect of oil flowing freely. More details on the Middle East in just a moment, but flip the board over because you can see that lower oil is nonetheless supporting the equities and futures picture, green across the screen from Asia to Europe to Wall Street. Well, let's take a look at the risk events markets are focused on this week. On Wednesday, it is, of course, the Fed decision, Kevin Warsh's second meeting as chairman. The odds of a hike up since the price of oil crossed $100 a barrel. But do we get that repriced, given what's happened in the Middle East over the weekend? The first hike not fully priced anyway until September. Also, on Wednesday and into Thursday, we've got a slew of tech earnings from Microsoft to Meta, Apple, Amazon, SK Hynix and Samsung as well. That fall in Alphabet shares on Thursday on the company's CapEx ramp up, despite the whopping rate increase in cloud computing revenue, really showing what a tough setup it is for the names reporting this week. And then on Thursday, the Bank of England decision, of course, a hold expected, but do we see some hawkish dissent? How much hawkish dissent do we see given the events in the Middle East? So plenty on the agenda. Let's set you up for the day and the week ahead. We begin with oil and gas prices sharply lower this morning, with the US and Iran holding fire after weeks of escalating tensions. The US military has held off strikes since late Friday without explanation and without announcement, while the Islamic Republic signalled it was also refraining from any retaliatory attacks. The US ambassador to the UN, Mike Waltz, says that President Trump is allowing for diplomacy.
The president is keeping all options on the table. I've spoken with the negotiators. I've spoken with Secretary Hegseth. What the president is doing right now, as we've seen all along, is giving some talks, some space. Talks are ongoing. They're happening at every level, from the more technical aspect of it all the way to the highest levels, of course.
For more, Bloomberg Horizon's Middle East and Africa anchor Abir Abu Omar joins us now from Dubai. Abir, good morning. The market seems to be interpreting the pause as a positive, but could it actually be the calm before the storm? Waltz, we heard from him there, but he also denied a New York Times report that the US is holding off on strikes because of concerns about resources. What's your read on the latest?
Good morning, Lizzie. Well, a repetition of patterns here. So could this be the calm before the storm? Possibly. Now, the U.S. did stop attacking Iran after 13 consecutive nights of attacks in Iran. And so we don't have an explanation on why that is. As you have mentioned, the NYT did report that it was due to diminishing munition. President Trump telling the Wall Street Journal that the U.S. has more munition than one can imagine. But then again, how do we square the lack of attacks over the weekend? We just don't have a lot of clarity yet. Iran, on the other hand, saying that it will pause attacking on its own merit in the Strait of Hormuz and on countries in the GCC as a result of the U.S. halting its hitting of Iranian targets. And so this is where the situation is for the time being. Could this all unravel? Quite possibly, yes. You mentioned in your intro the MOU that was signed in June as well in Switzerland, and talks for that and the 14 concessions, Lizzie, uncertainty that we've been talking about over the past couple of months or so, really, that hasn't gone anywhere. And so will we see a return to that? We seem to have seen a period of escalation in the region where those concessions were not being discussed. Now, if you remember, those includes Iran's nuclear powers. They include the frozen assets, the oil sanctions. Most importantly, that nuclear component that President Trump really wanted to tackle. None of that is being discussed. The deadline for that MOU or the temporary ceasefire is fast approaching next month, August 16th. And so what happens after that? We also don't have a lot of clarity. But as you've mentioned, and as we've seen this morning, markets are reacting quite positively to this positive news, because for the time being, it is quite positive what we're seeing out of the Middle East and the region. Oil prices going down, risk assets climbing. But in reality, the Strait of Hormuz, the movement there is pretty much paralyzed. We're not seeing ships making their way through the Strait of Hormuz. And then you have the parallel war between Saudi Arabia and the Houthis that is keeping the Red Sea at risk as well. So it could all unravel. It is temporary positivity, but we await and see what happens over the course of the next few days, over the course of the next few weeks.
And shipping is the focus of the talks between Iranian and Irani officials. What diplomatic progress has there been over the weekend on that front, Abir?
Yeah, we saw an Iranian delegation, Lizzie, making its way to Oman to discuss shipping through the Strait of Hormuz. Now, the delegation did leave Oman saying that the traffic in the Strait of Hormuz is still very much at a standstill. We know that despite the U.S. stopping its attacks on Iran, it maintains the naval blockade. It does attack ships that go astray or go to shipping routes that it doesn't dictate. Iran, meanwhile, wants to maintain its dominance over the Strait of Hormuz. It still has a chokehold over the Strait of Hormuz, or the pathway that it had laid out for ships. It still maintains the fact that it will toll the Strait of Hormuz once that period of the temporary ceasefire dictated by the MOU is over. And so a lot of unclarity there. We know that the delegation left Oman over the weekend. We don't know what exactly was discussed, but those were deputy foreign ministers of both sides that discussed the traffic or the state of movement in the Strait of Hormuz. Again, something else to monitor. Not many details coming out of that meeting. So something to keep an eye out for over the next few days and over the Strait of Hormuz, and also in the Red Sea, where escalations there continue to happen as of this morning.
OK, well, we are seeing gold and copper climbing off the back as we say, oil and natural gas falling. Abir, thank you for the update. Abir Abu Omar there, our Bloomberg Horizons Middle East and Africa anchor. But meanwhile, it's a mixed session in Asia as traders digest those latest Iran headlines, but also the latest in the AI race, as we see China's homegrown chip champion CXMT surging on its trading debut. Let's get a check on the markets with Avril Huang out of Singapore. Avril, what are you focused on?
Yeah, Lizzie, as you say, given how oil and the dollar is faring, that's a helpful macro backdrop. So bonds, FX in the region are supported. But on the AI side of things, the recovery from Friday's heavy selling looks a bit more tentative. If you take a look at the way the Nikkei, Kospi and the TAIEX are faring in the Asia Pacific today, because there are the continued concerns about how these huge capital expenditures might not translate into huge earnings profits. And given the unwinding of the memory trade, or the picks and shovels side of the AI trade, flip the board, take a closer look at how some of them are faring in the Asia Pacific today. The three of them are actually reporting earnings this week: SK hynix, Samsung, as well as Kioxia. And this bar is very high. You are seeing also the likes of Kioxia today at one point plunging almost 10%, which is a reminder of just how volatile this AI trade is. Now flip the board again. Think about as well, when it comes to how the Chinese chip makers have been ramping up efforts, that could also mean that they eventually help to ease or end the memory squeeze. And you look at the way that Changxin Memory, CXMT, is faring in Shanghai today. It popped 470% at the open, and it's just been extending those gains since then, after already a $9.8 billion IPO, which was China's second largest ever. We had the likes of Nomura even saying it could add 1,200% from the IPO price as it gains market share. Now, worth also considering how there were some concerns that that this big IPO could form a sort of liquidity squeeze. So it's also encouraging if you take a look at the performance of the tech-rich gauge, the Chinex, and how that is also in the green today. Take that along with what CXMT is doing, encouraging signals coming through for Chinese tech. Lizzie?
Avril, thank you. That's Bloomberg's Avril Huang. And we also have futures pointing higher on both sides of the Atlantic this morning. The Nasdaq seen leading gains. It's up 1.4% as things stand. Let's bring in Ven Ram, cross-asset strategist at Bloomberg MLive. And Ven, partly Nasdaq futures are boosted by lower oil prices, but we're also looking ahead to a busy week of tech earnings. How could those numbers change the picture in markets when at the moment it seems like less is more when it comes to CapEx?
Morning, Lizzie. Absolutely. Less is more is the mantra that the investors want to hear. We've got two major earnings reports from tech companies, at least Microsoft and Apple. And what Apple is going to say with regards to its capital program is going to be very important for the markets. And as we have seen, there is plenty of enthusiasm over in Asia about, about the prospects for AI. But if you look at the contrast in the US, it couldn't be starker. As you were saying, one of the facets that the markets are watching is the capital expansion program. The other is valuations, right? I mean, if you look at valuations in AI, they've been up and away, soaring up and away. And if you look at the semiconductor sector this month, it has seen very little by way of inflows. So investors seem to be coming to the realization that, look, this party can't continue forever. And I think that realization is going to be with them for a while. There is no meaningful sign that the rotation out of semiconductor industry is over yet. So I think that, for a while, US stocks, AI stocks, AI-related stocks are going to be on the back foot for the time being.
And then, just coming back to the geopolitics, you've had traders pricing in more of a chance of a surprise Fed hike this week off the back of oil tipping past $100 a barrel last week. But now there's this pause in the Middle East tensions. So do you expect the likelihood of a hike to fall back again? John Author's saying it's not going to go to zero.
No, it's not going to go to zero, but I don't know if the Fed is going to raise rates this week, Lizzie. But I think that what matters to investors is the long-term import of oil prices, not what happens on the day. Of course, today oil prices have tumbled, but if you look at oil prices as a whole this year, they've averaged $87 a barrel as opposed to $68 a barrel last year. So I think that is what matters for the Fed. And if the Fed is intent on quelling inflation, as Kevin Walsh has been repeatedly saying, and the Fed itself believes that core PCE inflation is going to be 3.3% this year, there is no way they can't not raise rates. And I think that imperative is what matters for the markets.
OK, Ven, thank you for the analysis. That's Ven Ram, cross-asset strategist at Bloomberg MLive, ahead of a busy week when it comes to tech and central banks. Still ahead, though, on Daybreak Europe, we'll bring you the highlights from Bloomberg's exclusive conversation with the NVIDIA CEO Jensen Huang. But first, hundreds of thousands of people evacuated as wildfires spread in France and Spain. We'll get you the latest there next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:15 a.m. here in London. Well, more than 300,000 people have fled their homes in France and Spain as wildfires threaten the major cities of Madrid and Bordeaux, and as a new blaze erupted in eastern Spain. Let's bring in Bloomberg's Madrid bureau chief Rodrigo Orihuela for the latest. Rodrigo, just talk us through the human, environmental and economic cost of these wildfires so far. Good morning.
Good morning. So these are major fires, and what they are doing is they're pushing a lot of people to be moved out of houses. In Spain, they're basically happening outside towards the west and the southwest and south of Madrid. They're happening in many cities and towns that are either sleeper towns for commuters or which are used for summer residences by a lot of people. A lot of the smaller towns have been evacuated. We're talking about towns with maybe less than 5,000, 10,000 people have been evacuated, some of them because the flames have actually reached the towns, others as a preventive measure. There are also tens of thousands of people who've been told to shelter in place because of the smoke to protect them. The quality of air in all these regions is quite bad. And the smoke has also at times reached other areas and Madrid itself. It's reached large parts of Madrid over the weekend. And then you also have a similar fire taking place way, way, way east on the coast or near the coast in Valencia, which started late Friday or early Saturday. And then in Bordeaux, that is already really quickly approaching the city itself. Thousands, tens of thousands have been evacuated as well. Last night at around 9 p.m., the interior minister said that the fire may well, or he indicated that the fire may well reach Bordeaux itself, reach Bordeaux proper. It was at about 15 kilometers. So that would be a major, major city which is being affected directly by the flames. And as a major city, that means there's a huge amount of people who have to be thought about and moved and protected.
Well, yes, French President Emmanuel Macron set to hold a crisis cabinet meeting today on the fires. You've got, of course, insurers looking on, big questions about rebuilding. Does it look like the fires will be brought under control soon?
So in the specific French case, the interior minister yesterday said that the fire was not under control, that it was extremely erratic, and so that seems that it will not. There is no clear indication that it will be put out under control at any foreseeable future in the next day or 2 or 3 at least. In the case of Spain, very late at night yesterday, the interior minister said that the fire is controlled. What they mean by this isn't that the fires are that they're winning the battle against it, that the fires are becoming smaller, but that they have limited where the fire goes. It's not expanding. And they have also pretty much contained it within the confines of nature and stopped it from getting into actual cities or towns. So the two situations are slightly different. Now, that means contained for now. It doesn't mean that they have won the battle, and it's still going on in the east. And so, the added issue we have in both countries is that temperatures will go up. One of the advantages Spain had this weekend was that temperatures dropped a lot. They were down at about 24 degrees in Madrid, which is very low for July, and that helps because there's more moisture. It doesn't feed fire as much as hot days. Now, the problem is that today temperatures start escalating again, and tomorrow they'll start going up in France again. So while there was good prospects for Spain yesterday, not so much for France, we still have to see and wait for the effect of the increase in temperatures.
OK, a difficult outlook ahead. Thank you for the update, Rodrigo. That's Bloomberg's Rodrigo Orihuela. Well, coming up, we're going to turn to the market consequences of the geopolitics, how Europe's natural gas market is in a vulnerable situation as prices hit their highest in months. More on that next. This is Bloomberg.
When it comes to the European gas market, it is a vulnerable situation. And, we are very uncertain about, how we will enter the winter as such.
Now we have winter in the horizon. So Europe and China and Japan and Korea all need to build their storage of natural gas ahead of the winter. So I think we're going to have to face some competition for cargoes.
Some of our Bloomberg TV guests speaking to us about their worries for Europe's gas market as we head towards the winter. Conflict and then a fragile ceasefire in the Persian Gulf have both led to gas prices whipsawing in recent weeks. The moves complicate a host of problems in Europe, including how quickly gas storage can be replenished ahead of winter and the EU's shift away from Russian LNG. For more, let's bring in Irina Shriya, lead analyst for global gas markets at Bloomberg NEF. She joins me now on set. Good morning, Irina. So, of course, we've got gas prices lower this morning off the back of what we've seen in the Middle East. But just talk us through where historically European gas prices are right now and really what the main drivers are for them?
Yeah, absolutely. Morning, Lizzie. So European gas prices have surged last week to their highest level in 4 months. But this morning we see a big drop. So this kind of highlights the uncertainty on the market. And the key reason for that is, of course, the disruption of LNG flows in the Strait of Hormuz, which is the key shipping route that carries about 20% of global LNG supplies. So with no clear timelines of when the flows can potentially fully recover, the market is pricing in this uncertainty. And this also comes at a critical time as Europe is rebuilding gas storage inventories ahead of the winter season. So the region needs to rely on these LNG supply flows.
So what's the market telling us about where prices go from here?
Yeah, absolutely. So I think if we're looking at the futures curve, which is basically market's view of where gas prices are headed, it shows us that gas prices both for the rest of the summer and for the winter season remain quite high and elevated. And interestingly, that summer prices are slightly higher compared to the winter prices, which is quite an unusual seasonal pattern, as typically summer prices are lower. And the reason for that is market is pricing in higher risk in the near term, meaning the rest of the summer season. Also, we need to keep in mind that global gas market remains disrupted. Europe has to compete with Asian buyers for the available LNG supplies, and that will keep gas prices elevated.
So what are traders most worried about right now in Europe's gas market?
I would say that beyond the Strait of Hormuz, markets is mostly worried, especially in Europe, about restocking gas inventories ahead of the winter season. So if we're looking across the region, storage inventories are only 50% full, which is quite low for this time of the year. And then this leaves also not enough time for the region to stock up before the colder weather arrives. And then if we're facing particularly cold winter or disruption in the Strait of Hormuz remain for longer, then it's quite a challenging situation for the region. Also, we need to keep in mind that EU is set to phase out Russian LNG supplies by end of this year.
Yeah, how much does that phasing out harm the market?
I would say that the region would have to rely even more on global LNG supplies. If we're looking at the last year, Russia supplied about 13% of total LNG imports into the region. So that volume will now needs to be replaced. US is already the biggest supplier of LNG into the region, so its role is most likely going to grow. So to sum it all up, Europe is facing quite a challenging winter ahead of us. Global gas market remains disrupted, and it needs to find a replacement for Russian LNG flows.
Okay, thank you very much for that analysis. That's Irina Sereda from Bloomberg NEF. Really a difficult picture and not great timing. Now to some of the top stories we're following for you around the world this morning. The US is said to be pressing Mexico to bring its tariffs on Chinese steel and aluminium in line with Washington's tougher measures. While it represents a big ask from US trade officials, Bloomberg understands that Mexico is receptive to the proposal being discussed as part of broader USMCA negotiations. Details, including tariff rates and the affected products, are under review, with the aim of reaching an agreement by the end of the year. Elsewhere, UK Prime Minister Andy Burnham will host Ukrainian President Volodymyr Zelensky as his first international visitor. Their meeting at a naval base is a sign of Britain's continued support for Ukraine and will allow UK officials to help Zelensky prepare for his meeting with US President Donald Trump later on this week. And German police say that the suspect in Saturday's deadly van attack at Berlin's LGBTQ Pride event has been killed. He was shot on Sunday evening last night in the Spandau district after rushing towards officers with a knife. The suspect, a German citizen, allegedly drove a van into a crowd at the Pride event, killing one person and injuring 29 others. Police say he was a known ISIS sympathiser. Well, those are some of our top stories from around the world this morning. But coming up here on Daybreak Europe, bonds gain as oil retreats. We'll discuss the potential impact on this week's interest rate decisions of the latest in geopolitics. So that conversation coming up with Shriya Samarth of StoneX next, as we look at futures here in Europe, pointing higher, tracking gains in the Asian session and on Wall Street. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. An uneasy truce. The US and Iran pause strikes, sending oil and natural gas prices sharply lower. Meanwhile, China's chip champion CXMT soars as much as 530% in its debut in Shanghai. Elsewhere, investors get set for the biggest week of earnings from the global tech giants. And firefighters in France and Spain battle a sixth straight day of wildfires, with more than 300,000 people evacuated over the weekend. Well, a very good morning. Happy Monday. Here is the picture in markets as tensions in the Middle East ease. We have oil dropping this morning. Brent trading at $92 a barrel. Remember, it topped $100 a barrel last week, and it's been below $90 a barrel this morning, so paring some of those losses now. But as inflation concerns ease, bonds rallying, the 10-year Treasury yield at 4.63 right now, and the dollar starting the week lower, down 0.2%. But flip the board over to the equities and futures picture, and lower oil supporting both, green across the screen from Asia to Europe to Wall Street. Nasdaq futures up 1.4%. Now let's take a look at the front pages this morning. Kicking off with the Financial Times, it leads on the fall in oil prices after the US and Iran paused their attacks. But if we flip over to the Wall Street Journal, it's focused on big firms hiring again, defying predictions of an AI wipeout. Meanwhile, coming to Europe, El País out of Spain says the biggest wildfire in Spanish history continues unabated. It says the flames have destroyed 50,000 hectares of land. We can get a roundup of all the stories you need to know to get your day going in today's edition of the Daybreak newsletter, which as ever terminal subscribers can find by going to D8YB Go. Now turning back to the markets, bonds advancing as easing tensions between the US and Iran and the subsequent fall in oil prices temper concerns about inflation. This as the Bank of England and Federal Reserve both prepare for rate decisions this week. And we can discuss now with Shriya Samarth, EMEA head of rates at StoneX. She joins me now in London. Great to see you again. Looking at the bond market this morning, relief, right, compared to last week. How much is oil in the driver's seat?
I think we're very much still in what I like to call an oligarchy. Despite Brent crude dropping below 70 at some point, we are back to relatively higher yields and still looking at geopolitical tension. Now, the latest CPI prints in the US, UK and Eurozone were actually a bit of a temporary relief from lower energy prices, but that turned out to be very short-lived. At least for the month of June, oil was not fueling inflation. But now for the past 2 weeks, we've seen an increased correlation between US Treasury yields and oil prices once again. What initially started off as in the 5 and 10-year space is now strongest in the 2-year U.S. Treasury yield, which did breach year-to-date highs last week at 4.35 and is now kind of encouraging a bit of a U.S. Treasury curve knee-jerk bear flattener.
OK, well, I wonder where the latest in the Middle East leaves your expectations for the Fed this week, because you had seen expectations of a hike, a surprise hike from Kevin Warsh climbing when oil topped $100 a barrel. Do we go back to not seeing a hike because of this?
Well, it is Fed week, and Kevin Warsh has a bit of a self-fulfilling prophecy to play with here. The language that he's used in and of itself has kept yields elevated and restrictive. But despite that, the labor and inflation data may not point to an immediate hike this week for the U.S. That being said, I think Kevin Warsh runs the very real risk of becoming the boy who cried wolf. If the wolf never shows up in the form of a rate hike when he's been talking so tough on inflation so far, what does the cry even mean? That's what the OIS curve is currently trying to figure out. It's been aggressively repricing and currently pricing in at least one cumulative hike by year end, but potentially even two.
But then, of course, he's saying that there'll be less forward guidance. Does that just create more room for the market to be in the driver's seat, you know, dictating what it thinks the Fed should do and then putting pressure on the FOMC?
Yes, historically that has happened. The markets, the OIS swap market in particular, tends to lead the Fed. But he's kind of putting a stop to it and saying the data is not going to be accurate. In fact, we already know this from just last month's CPI print, right? The data is already stale. In fact, it's gone moldy. We can no longer rely on that data to make the decision. In the Sintra panel in Portugal, Warsh and fellow central bankers made exactly that statement, that they need to move away from forward guidance and toward credibility, toward faith that central bankers will act quickly if and when inflation strikes. And
that's even a theme that we've seen out of the Bank of England and the Eurozone, less forward guidance. What are you expecting from the BOE this week? A hold is, you know, the consensus, but beyond that, do you see 2 more hikes before year end like the market does? How hawkish of a hold could we get this week?
So the Bank of England is currently priced to pause like its peers. There's similarly another rate hike priced in by the end of this year. And that kind of ties out to what we're seeing in the data, another sub 3% CPI in June, but resilience in GDP and retail sales. I have to say, though, in the markets, we may just have to learn to sit with this uncertainty among central banks. Understanding the risk that a central bank getting a rate decision wrong is going to weigh heavily on it versus any benefit of moving proactively. And history attests to this, right? Look at Alan Greenspan in the mid-2000s or Christine Lagarde in 2009 or even any central banker in 2022 during the post-pandemic inflation spike.
OK. But just staying in the UK, you've written about the politics in your latest notes. I wonder how much the Burnham government's being unfairly blamed for the spike in gilt yields that we saw last week when you've got so much going on in the international picture. And really, given that spike, I'm sure it'll come down today at the Open, but how worried you are for the new Chancellor, how squeezed he's going to be?
So last week's moves were related to oil. The 10-year gilt yield did breach and hold above 5% for the first time since May. But a lot of that was geopolitics. Also, some of that was the uncertainty of this new administration, as you say. I think what really stood out to me in last week's news was the OBR did predict in its 50-year outlook that simply maintaining a 95% debt to GDP ratio could cost up to $100 billion extra a year. Now, the public sector net borrowing figure did drop to $16 billion for June, but clearly that's still too high. And our new Chancellor, John Healey, who was known from resigning from the previous government due to a lack of defense spending, is now going to have to balance those ambitions with a very precarious budget indeed. And that's definitely going to affect gilt yields.
Yeah, if he's promising to stick to the fiscal rules and fulfil the defence spending commitments, does it at this point make it inevitable that you'll see spending cuts or tax rises?
Yes, possibly. I mean, the way it's going, if you're going to stick to fiscal rules, something has to budge, and that's probably going to be spending cuts or tax rises. Although I'm interested to see how this devolution play comes out. I expect that to play out in the belly of the curve, especially because it's the most liquid.
And how much headroom he could leave against the fiscal rules? Is it just wafer thin, as we've seen from some previous chancellors? Shriya, always a pleasure to have you on the programme. That's Shriya Samarth, EMEA Head of Rates at StoneX. Thank you very much. Well, coming up on Daybreak Europe, a busy week ahead with banks, automakers and energy firms all set to report. We'll look ahead to this week's results. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:40 a.m. here in London. We've got earnings coming out of our ears this week in Europe and earnings season really ramping up. Again, results expected from major banks, car makers, aerospace, airlines, defence firms as well. Let's get a preview with our Bloomberg EMEA earnings specialist, Chloe Melly. Chloe, just take us through what you're expecting for autos, first of all. We've got Volvo and Volkswagen having reported last week, and it really was a difficult picture.
Yeah, absolutely. So it doesn't bode very well. So as you mentioned, we had Volkswagen cutting guidance. We had Volvo Car withdrawing its sales target. And both of those companies have mentioned the same thing, which was this weakness in the Chinese market, where they're facing just so much price competition from local Chinese manufacturers. And then those same manufacturers are also expanding their market share in Europe as well. And so this is the picture in which we have BMW, Mercedes, Porsche, Stellantis and Renault reporting this week. So it could be not great in terms of the picture that we get. For Stellantis, we have also a focus on the North America turnaround and the progress on that. But overall, it could be quite weak and really raising those questions around the deeper cost cuts, the restructurings that we could have, and also any support from the EU that those companies might need at some point as well.
OK, interesting that those are the themes you mentioned more so than higher oil prices. But let's also turn to other kind of sectors that you're focused on this week. What are you watching?
Yeah, so banks are going to be really in focus. We had, of course, those blowout Wall Street results. We had BNP Paribas as well having a really good report last week. And so that bodes quite well for those companies, for those banks with a big equities trading desk. So we're thinking of UBS and Barclays in particular, a little bit less so for Deutsche Bank because it has more of that fixed income trading exposure instead. And then the private credit exposure exposure for Deutsche Bank is also weighing on sentiment a little bit. Energy is going to be in focus. We have Shell and Eni reporting this week. Of course, they will have benefited from that disruption to oil flows. On the flip side of that disruption, we have, of course, those consumer companies that could be impacted by that disruption weighing on inflation that is weighing then on consumer confidence. So we're thinking of the likes of Unilever and Reckitt, and then also the luxury space with LVMH reporting just this afternoon, actually.
OK, Chloe, you've got a busy week ahead. Thanks for giving us a preview. That's Bloomberg's Chloe Melly. Well, that's the preview. Now let's look at what we've already had, how Europe's biggest companies have been performing so far when it comes to earnings season. Let's go to Tim Craighead, Director of Equity Research here at Bloomberg Intelligence. Tim, you keep a scorecard of these things. How does it look so far, a third of the way through?
Yeah, give credit where credit's due. Our European equity strategy team with Laurent Dulay has just published their sort of pulse check so far. And, you know, we've got a third of the companies that will report this week, as you've mentioned. A third have reported thus far. And what we've seen here is about a 12% earnings growth, you know, thus far. It's slightly above expectation, but it's also been quite concentrated. Think pharmaceuticals, financials have been a big part of this. ASML specifically in technology has been a positive. And, you know, you look at some of the other industries where we've had high expectations, such as industrials or energy, and their earnings haven't quite been up to snuff relative to those lofty expectations being driven by electrification, energy transition, things along those lines.
Yeah, it feels like this is a really difficult market to impress. What's been the broader market impact so far when you look beyond stock by stock?
It is interesting. You take an overall assessment with those issues of high expectations, and you think, you know, markets are at record levels right now, despite tariffs of last year, which have now come up again, the Middle East crisis that continues to go, and we've had, you know, stocks at record levels. So high expectations built in, you end up with a situation where if you beat, stocks are up just a smidge, less than 1% on earnings. If you miss, those high expectations create a high hurdle, and stocks are declining, call it 3% or so. So it's definitely skewed to the miss if in terms of impact.
So a difficult bias to beat. When you've got such big worries about the Middle East and AI, what's been the general mood of management calls so far? Yeah, you know, I have to say, you know, our team is concerned about cost structure going forward, in particular in the second half, and its impact on margins. But if you look at what managements have said on conference calls, they've been quite upbeat. The strategy team does have a sentiment index that they use data science to create following management calls, and it's at the highest level that we've seen since the pandemic. AI is a big topic right now, and you know, it's still early days from the standpoint of implementation, but managements have been constructive as it relates to efficiencies, the ability to reduce costs, but also to expand revenue. So take that out, it's quite constructive relative to what we would have been a little bit concerned about hearing. Really helpful analysis, Tim. Thank you so much for bringing it to us. That's Tim Craighead from Bloomberg Intelligence. Now, to some other top stories that we're following for you this morning. DeepSeek is said to have put its latest fundraising plans on hold for now. Bloomberg sources say that the company's founder is frustrated over online posts by Chinese media about comments attributed to him from a June funding round. The reports, based on an unverified transcript, say that the billionaire founder discussed a reliance on NVIDIA chips and China's lag in AI relative to the US. Elsewhere, Shein has revealed softening profitability and slower revenue growth as it offered the first detailed look at its finances ahead of a planned Hong Kong IPO. The company posted a loss of $99 million in the first 3 months of 2026 versus $395 million profit a year earlier. Shein won approval for a Hong Kong listing after failed attempts in both New York and London. And Nvidia is reportedly in talks to provide a guarantee of about $250 billion of financing for OpenAI. The Wall Street Journal says the deal should help OpenAI lease a 10-gigawatt data center hub that SoftBank is developing in southern Ohio. That complex is a centerpiece project for both SoftBank and the Trump administration and would be among the largest in the world. Well, speaking of Nvidia, the company set to acquire a 4.5% stake in South Korea's Naver under a $1 billion strategic investment deal. In an exclusive interview, CEO Jensen Huang told us that Korean tech is experiencing a golden age and the country is well positioned to lead the world's AI infrastructure build-out.
This is the golden ages for Korea, as you know. Their semiconductor business is booming. Their industrial business is booming. You know, this is a country that has the ability to help the world build out the AI infrastructure, that they're incredibly adept at adopting new technologies, and is a really technologically forward-leaning society. And they love using AI. AI has really diffused throughout their society and their industry. And so this is a great time for them. We're announcing several things. We announced a big partnership with SK Group, where our companies are going to enter into a business partnership where we do over $500 billion of business with each other, whether it's consumption of and purchasing of memories or selling AI supercomputers to them as they scale out 2 gigawatts of AI factories. There's a whole bunch of other announcements. We're investing $1 billion in Naver to help. They're the Korea's leading AI cloud. They're going to scale up in Korea up to they're going to scale up 200 megawatts, I think it is, and they're going to expand across the world. And so we have a whole bunch of announcements that we're making today.
With the expanded SK relationship, there's also sort of more direct involvement with NVIDIA on the roadmap for HBM, future generations of HBM. Talk about that. You know, I remember you being on stage earlier this year saying 5 years ago we told our supply chain what was going to happen, and it did happen. And you gave some credit to the memory makers in going with you on that journey. But clearly you want to be involved in the direction of travel for future generations of HBM.
Yeah, we're working together on, of course, we started with HBM2, worked on HBM3, 3E, 4, 4E, and then beyond. And so we've got a whole roadmap of memories that we're working on together. It is also the case that the semiconductor industry has really changed. And the reason for that, because we used to build computers for people to use, and we're going to still continue to build incredible computers. These are now processing AIs for humans to collaborate with. But in the future, we also have AI agents and robots, and they're going to be using computers. So instead of just 1 billion people using computers, we're going to have 100 billion agents and billions of robots all using computers. The computer industry, the chip that's built on top of the chip industry, surely is not big enough. And so this is one of the realizations of the semiconductor industry, that now computers are built not just for people to use, but computers are being built for computers to use. My guess is that the semiconductor industry is probably going to have to be 10 times larger than it is today over the next decade or so. And so working with our partners in Korea and around the world to scale up the supply chain of semiconductors so that we're prepared for this AI future is really important.
Out of San Francisco, the NVIDIA CEO Jensen Huang speaking exclusively there to Bloomberg tech anchor Ed Ludlow. Well, we'll have plenty more coming up on Daybreak Europe, some terminal charts to frame your day ahead. Good morning from London. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Just time to leave you with some terminal charts to frame your week ahead. We have got a big week for central banks, but also for earnings, particularly big tech. And here's where we left stocks at the end of last week. The first back-to-back weekly losses since March, and traders just not enthused by what they're seeing from big tech earnings so far, despite the fact that of the S&P companies that have reported results so far, about 85% of them have beaten expectations. So you've got worries about the AI bubble bursting, also traders asking themselves how something so good can carry on for much longer. Let me illustrate this a different way. Flip the board over and you can see how much earnings beats are losing their edge. Here, just a bias. So what you have to do so well to impress this market. But this morning, of course, we've got lower oil prices giving stocks a bit of a boost. Flip the board one more time there, and there's one sector in particular I want to highlight, and that is autos. It really has been the standout laggard so far. This is a global story, as you can see. It's not helped by, in general, relatively higher oil, but also rampant competition and a declining Chinese market. Chloe Melly highlighting this for us because, of course, we've got lots of automakers in Europe reporting as well this week. Now, let's take a look at the risk events on the docket. Just reminding ourselves, of course, we've got the Fed decision on Wednesday, the Bank of England decision on Thursday, both expected to hold. But how much hawkish commentary do we get out of these central banks? Somewhere in between, we've got a load of tech earnings as well. Microsoft, Meta, Apple, Amazon, SK Hynix and Samsung all set to report. Alphabet showing last week just how difficult a season it is going to be to impress investors at the moment. But speaking of earnings, coming up, we're going to be hearing from the AstraZeneca CFO joining the opening trade to discuss results. She'll be on at 7:45 a.m. London time. Coming up next, the opening trade with Anna Edwards and Guy Johnson. They'll take you all the way to the European Cash Open. This is Bloomberg.